Welcome back. So in today's session, we will tackle multiple choice questions. Now, wherever the student needs to know a particular format or a particular formula, that will be shared just before tackling that particular question. I request students to memorize that formula or that format and then proceed with the video. So let's move on to question number 1. Which would be least effective in ensuring the security of confidential information? So we will take the first option, monitoring emails. What do you mean by monitoring emails? These are just automated systems that flag suspicious content, keywords, or it could be a manual review by administrators or supervisors. So basically, it is to check whether there are any spam mails, and even manual review is done to ensure that employees do not share confidential information with others. So this is actually an effective method of securing confidential information. The next option is encryption of files. What do you mean by encryption? It's a method of scrambling the data in a message or a file so that it is unintelligible unless it is decrypted. So here again, we are ensuring the security of confidential information because unless you have the decryption key, you will not be able to understand the information. So that again is effective. The third option, dial back facility. A user dials into a system, typically using a modem and a phone line, and it provides their username and password. So the system immediately disconnects and calls back the user at a predefined number. And this number, it's a known and trusted phone number associated with the user's account. So what is the advantage? Even if another person steals the username and password, he will still not get access to the system because it is only through the callback that he gets connected to the system, and this callback is to a predefined number. So this again is effective. Now moving to the last option, universal passwords. Now universal password means every employee who has got access to this information keys in with the same password. So what is a disadvantage? Universal password applies to everyone and there would be no way to trace the person responsible for transferring or amending the information. So this is a big disadvantage. We cannot know the person who is responsible for amending the information. So this universal password is not effective. So since the question asks you the least effective one, the right answer is option D, universal passwords. Moving on to question number 2. Which one would show information on the frequency of machine breakdowns causing lost production? Option A, the non-current asset register. The non-current asset register is just a register of fixed assets. So definitely that will not show the frequency of machine breakdowns. Option B, the machine maintenance schedule. Now the machine maintenance schedule just shows in what frequency the machine has to be maintained, whether it is the next month or whether it is the next quarter. So it is only those information which is given in the machine maintenance. So definitely it will not show the frequency of machine breakdowns. Now moving to option C, production output reports. Now the typical information given in a production output report is there will be a target and they will give you the actual, and they will always show the difference between the targets and the actuals. And this difference is further analyzed into the production loss analysis. And the reasons could be there's no material, there's no operator, power source cutoff, setup time, manpower not available, machine breakdown. See, in this particular case, 19% of the time, there was a production loss due to machine breakdown.
So this forms part of the production output report. So the frequency of machine breakdowns is given in the production output report. Now, just for your information, we will go to option D also. The purchase ledger account for the supplier that provides replacement machine parts. The purchase ledger account will definitely not show the details of frequency of machine breakdowns. So the right answer is option C, production output reports. Now, before moving to question number 3, we will have a quick refresher of some of the key points that we have already learned. Here the key points that you have to note is the difference between the direct cost of getting the information and the indirect cost of getting the information. Now, whenever we implement a new information system, it is said that the benefit should always be greater than the cost. Now, the cost is divided into the direct cost and the indirect cost. The initial cost, that is the purchase cost of the new hardware and the software, and the running cost, that is the labor cost and the IT support service cost, all these are costs relating to a new information system. So you would have noticed that all the direct cost aims at getting the information, directly related to getting the information. Now look into the indirect cost. Now training cost. Now training cost, we can say it is general training. Now general training is not for getting this particular specific information. It increases the efficiency of the staff in the long term. It is not directly relating to getting a specific information. And as for indirect cost, all these indirect costs are expenses which do not have a direct connection with getting the information. Since there is no direct connection, that is why all these costs are termed as indirect cost. Now let's move on to question number 3. Completing a questionnaire for improving staff morale will take 30 minutes to complete, and staff are told that they must do this during their lunch break. Cost of producing this information are. So there are 4 costs that are given. They are asking you which are the indirect cost of producing the information. So we know that direct costs for producing the information are costs which are directly related to getting the information. And what are indirect costs? In indirect cost, there is no direct connection. So we will go to option 1. So the information is being collected for improving the staff morale. And this questionnaire is something which is directly related to that. Only if we have the questionnaire, we can get the information, right? So it is a direct cost of getting the information. Now option 2, paying wages for people to email staff with instructions on how to complete the survey. Again, these instructions are required for completing the survey. So again, it can be directly related to getting the information. Option number 3, loss of staff morale due to loss of lunch break time. Because of the loss of lunch break time, the staff is being sad and their other work is getting affected. So basically, this loss that the company is suffering is not directly related to getting the information. There is no direct connection. So it is an indirect expense. Option number 4, delays caused in other parts of the business due to staff filling in the survey when they should be working. Again, there is no direct connection. So it is an indirect expense. So in this particular case, option 1 and option 2 are direct expense, and option 3 and option 4 are indirect expense. Since they've asked about the indirect cost, the right answer is option C. Question number 4. An accountant is concerned that paper usage in her business has risen by 10% in the last year. Last year, the paper usage was $40,000. So 40,000 into 10%, the amount works out to $4,000. So this is an increase in paper cost that has taken place. She has estimated that it will take 4 weeks of her time to prepare the report, plus the total cost of preparing the report will be $28,000. So for preparing the report, she has to spend $28,000. This report is an example of bad information. Which principle of good information does it breach? So the reason here is very clear. She has to incur a cost of $28,000, and the benefit that she will get is she will ultimately save the increased paper cost of $4,000. It is not cost beneficial. All the other options are just not the right match. Now moving to question number 5. Now, what was ERP? It's a software that integrates the business processes, all the business processes, whether it is manufacturing, inventory control, sales, HR, etc., into a central database. In ERP, there are different modules from where the users enter the data, and it is getting transferred to the central database. So the entire processes of the organization is getting integrated into a central database. That's the meaning of ERP. Now let's read the question. A manufacturer and retailer of kitchens introduces an enterprise resource planning system. Which of the following is not likely to be a potential benefit of introducing the system? Option A, schedules of labor are prepared for manufacturing. Now, in an ERP system, we have something called the Master Production Scheduling Module, the MPS module. Now, in this MPS module, everything related to production, whether it is material, whether it is labor, everything can be prepared here. So, option A is actually a benefit of the ERP system. Now, option B, inventory records are updated automatically. Definitely yes, because it's a central database. So definitely this is also a benefit. Option C, sales are recorded into the financial ledgers. Yes, definitely from the sales module, it gets automatically updated in the financial ledgers. Yes, that's also a benefit. Now, option D, critical strategic information can be summarized. Absolutely not. That is done by the executive information system. Now, executive information, we know it is for long-term decisions and it relies on internal and external data. Now, all this external data, it is just not part of the ERP system. So that is not a benefit. So since the question asks, which is not likely to be a potential benefit, the right answer is option D. Now, moving to question number 6. It is often said that big data enhances business decisions. Which of the following statements is or are true? Decisions which includes big data analytics can lead to a competitive advantage. Yes, definitely yes, this is true. Starting from corporate giants like Amazon to small retail supermarkets, big data analytics will definitely give a competitive advantage. Now, the second statement, big data analytics cannot account for competitors' expected actions. Now, big data analytics captures the history of transactions that are taking place, the expected actions. That is what will come in the future cannot be predicted by big data analytics. The true statement is statement 1 only, so the right answer is option A.
Now, the difference between absorption costing and ABC is in the manner in which overheads or the indirect expenses are divided between the products. How is it divided under absorption costing? It is based on machine hours or labor hours. That is, all the overheads, there is one standard method of dividing, either machine hours or labor hours. But in activity-based costing, what does it do? The entire overheads are split based on its nature, and it's called the cost pool. And for each cost pool, there is an apt cost driver. That is, there are separate cost drivers for each cost pool, which means that under activity-based costing, there is a more logical method of dividing the overheads between the products. Now, a small question. What we were talking about was indirect expenses. What about direct expenses? Is there any difference in the manner in which direct expenses are divided between the products under absorption costing and under ABC? No, there is no difference. Direct expenses are those expenses which can be directly linked to that particular product, like the direct materials or the direct labor. So for each product, we know exactly what is the direct materials consumed by that product. There is no question of dividing between products. It is only in case of overheads that there will be a difference between absorption costing and ABC. Now let's tackle question number 7. A company produces a range of products and uses an absorption costing system. Which two of the following are unlikely to be a consequence of the company switching to an activity-based costing system? Unlikely means not likely to happen. Statement 1. Indirect overheads will be shared between products on fairer basis. Yes, that will happen for ABC. And second one, product pricing decisions will be improved. That will also happen for ABC because once the indirect overheads are divided on a fairer basis, then automatically the product pricing decision will also improve. So that will also happen for ABC. Statement 3. The prime production cost of each product will fall. What do you mean by prime production cost? Prime cost is nothing but the direct cost. Will the direct cost fall because of switch to ABC? I told earlier that whether you're following absorption costing or whether you're following ABC, the direct cost will remain unchanged. So their statement that it will fall, that will not happen for ABC. Statement 4. Cost control on indirect overheads will be harder to achieve. This statement is not true because since the indirect overheads are shared between the products on a fairer basis, it will be easier to achieve cost control on indirect overheads. So this will not happen for ABC. If we switch to ABC, it will be easier to achieve. Now, statement 5. Total production cost of each product will change. Yes, that will happen for ABC because the indirect overheads division will change and hence the total product cost will also change. So that will happen for ABC. Now the question asks you which two of the following are unlikely to be a consequence, which means that statement 3 and statement 4 are the two situations that will not happen for ABC. Now, if at all we have to find out the overhead cost per unit under ABC, then this is the format that I want you to follow. So, in the first column, you have the cost pool. And the second column, you have the amount of the cost pool that will be given in the question. And then you write the cost driver and you write the product name. And this is the total of the cost drivers. Say machine hours is 100 for product A and 120 for product B. Then the total of cost drivers will be 220 machine hours. And the last column is OAR or the overhead absorption rate. That is given by the cost pool amount divided by the total of cost drivers. Now in this particular case, what is the OAR as far as machinery maintenance is concerned? It is $10,000 divided by 220. So approximately $45. So for each machine hour, you are incurring machinery maintenance cost to the tune of $45. Now next step is to allocate it to each product. So what is the machinery maintenance cost related to product A? For 1 hour, it is $45 and product A takes 100 hours, which means that the machinery maintenance cost which can be allocated to product A is $45 multiplied by 100 or $4,500. This is how you allocate the cost pool amount to each product. Now we will tackle the question.
Question number 8. A company makes two products, alpha and zeta, and uses ABC to absorb its overheads. Cost driver of inspection cost is the number of inspections. Total inspection cost is $250,000. So they have given the details of alpha and zeta. The production volume in units is given. The units per batch is given. And the inspections per batch is also given. What is the inspection cost per unit of product alpha? So we will copy the format of ABC. So the cost pool is the inspection cost and the amount given in the question is $250,000 and the cost driver is the number of inspections. Now we have to find out the number of inspections for product A and product Z. The number of inspections, is it directly given in the question? No. It is only the inspections per batch which has been given. So in order to find out the number of inspections, we have to multiply the inspection per batch multiplied by number of batches. Correct? The next question is, do we know the number of batches? The number of batches is also not directly given, but they have given the production volume in units of alpha as 2500 and units per batch is 500. Which means that we can find out the number of batches from these two information. Because in one batch, 500 units can be produced. So to produce 2500 units, how many batches are required? Number of batches of alpha is 2500 divided by 500 or totally 5 batches are required. And as for zeta, the number of batches is 8000 divided by 1000 or 8 batches. Now it is easy for us to find out the number of inspections. Number of inspections for product A is 5 batches multiplied by 4 inspections per batch, which means that totally 20 inspections are required. Likewise for zeta, 8 batches are required and inspections per batch is 1. So 8 into 1, totally 8 inspections. So the number of inspections for product A plus product Z is 20 plus 8 or 28 inspections. Now calculating OAR. What is OAR? OAR is the inspection cost of $250,000 divided by number of inspections, which is 28. So per inspection, the rate is 8,928.6. Now we will allocate it to each product. Now for product A, there are 20 inspections and we know that per inspection the cost is 8928.6. So the inspection cost related to product A is 8,928.6 multiplied by 20, which is 178,572. So this is the total inspection cost attributable to product A. But we are asked to find out the inspection cost per unit. So we have to divide it by the number of units. For alpha, the number of units is 2500. So the per unit inspection cost works out to 178,572, which is the total inspection cost, divided by 2500, which is the number of units of alpha. So per unit cost is 71.43. So the right answer is option C. Moving to question number 9. A company makes products A and B. Production setup costs are $12,000. Total production will be 20,000 units of each of the products A and B. Each run means each production run is 1000 units for A and 5,000 units for B. Using activity-based costing, what is the setup cost per unit of A? So here the cost pool is the setup cost, which is $12,000, and for setup cost we know that the cost driver is the number of setups. So we copy the ABC format. So setup cost, which is a cost pool, The amount given in the question is $12,000 and the cost driver is definitely the number of setups. Now, do we know the number of setups for product A and product B? For each production run, 1000 units are produced and we need a total of 20,000 units of A. So, the number of setups is 20,000 units, which is the total units of A, divided by 1000 units, which is the units produced for each run. So we get the number of setups for A as 20. Likewise, for product B, 20,000 units are totally to be produced. And for each run, 5,000 units of B are produced. So 20,000 divided by 5,000. So there are 4 setups for B. So the total number of setups will be 20 plus 4 or 24. Now coming to OAR, it is the total setup cost of $12,000 divided by number of setups, which is 24. So for each setup, the amount incurred is $500. Now coming to the allocation to each product. Now for each setup, $500. For product A, 20 setups. So what is the amount to be allocated to product A? It is 500 multiplied by 20 or $10,000. Now they have asked us to find the setup cost per unit of A. So this is the total setup cost. We have to just divide it by the number of units of A, which is 20,000. So cost per unit is $10,000, which is the setup cost allocated to product A, divided by 20,000 units, which is the number of units of A. So per unit cost is $0.5. Now moving on to question number 10. Which of the following statements are true regarding activity-based costing and cost drivers? A cost driver is any factor that causes a change in the cost of an activity. Well, that's the exact definition of a cost driver, so that is a true statement. For long-term variable overhead cost, the cost driver will be the volume of activity. Now, what do you mean by variable overheads? Variable overheads are electricity charges, lubricants, cleaning materials, etc. So what they are asking is the long-term variable overheads, that is electricity charges, lubricants and cleaning materials. When taken on a long-term basis, the cost driver is the volume of activity. Do you think this is true? Now I will explain a situation to you. Now this variable overheads may change in the long run because of technological changes. Now this electricity charges amount may undergo change if we shift to solar energy. And for the cleaning materials, maybe it will be less if there is a robo cleaner. So in the long run, variable overheads will change not only because of the volume of activity or not only because of the number of units produced. It will change because of technological changes as well, which means that statement 2 is false. Now moving to the third statement, traditional absorption costing tends to under-allocate overhead cost to low volume products. We know that under traditional absorption costing, overheads gets divided based on machine hours or labor hours or simply based on the number of units, which means that for low volume products, that is goods which are produced in lower quantity, the machine hours will be less, the labor hours taken will be less, and the number of units produced will also be less, which means that under traditional absorption costing, since lesser machine hours and lesser labor hours and lesser number of units are associated with low volume products, the overhead cost allocated to low volume products will also be less. Well, that's a true statement. So the right answer is option A, 1 and 3 are the true statements. Now this is a question from the exam kit. The answer which is given in the exam kit is something like this. Option D, where they have marked the first statement, second statement and third statement as true. Now I wish to dispute on this. Now the explanation given in the exam kit is cost drivers for long-term variable overheads will be the volume of activity to which the cost driver relates. So statement 2 is correct. So what about the technological changes? I do not agree with the answer given in the exam kit and I have written my explanation here. Students are free to opt whichever answer they deem right.